Well, I'm not going to say that we called it, but if you watched last week's webinar, you know that we called it. We called the relief rally, and yeah, what a week in the market, wasn't it? Welcome to your weekly market recap webinar. This is Chris with Riz International, and we have a lot to discuss today because it has been a wild, wild week in the market. We talked about it. I asked Riz last week on webinar if he thought that this was just a recovery rally or if this might be the bottom and we bounced. And he said that, his thought process was that this was just a little bit of a recovery rally and that we had more downside. And look what happened. We may have bounced on, Monday was kind of, a non-starter. Tuesday we push up here, but man, Wednesday, Thursday, and Friday were crazy in the market, to say the least, especially Wednesday. Just an absolutely ridiculous dump on Wednesday after, coming right up close to this 4,100 support level, absolutely blew through 4,000 like it wasn't even there, but man, has 3,900 stayed strong. I thought on Friday I was not expecting this buying pressure coming into the power hour, into the close, but what a massive dip buy there by investors and market makers and everything like that, pushing us right back to 3,900, closing just $1.35 over 3,900 on Friday. Now, man, Monday is going to be interesting to say the least, but it has been a huge downturn in the market. And I think if memory serves here, yeah, we're getting really close to that bear market, thing. There's 20% right there. We were definitely in that on Friday, but we did manage to buy back up. Looks like we closed about 19% from the highs. That would be 19% down from the highs. And we're not quite in a bear market in the S&P 500 yet, but we are sure pretty darn close, to say the least. 3,900 though has been incredibly crucial. There's so much buying pressure down here. Now it'll be interesting to see if we can get another push towards the downside on Friday, or if we bounce off of 3,900 again. Now it is setting up for a nice little double bottom, formation here, but chart patterns mean nothing when there are other things going on. Obviously, there was a lot of concern about what Powell was going to say. If I'm not mistaken, he was talking to the Wall Street Journal. There was a lot of anticipation for that. Market was kind of selling off on Friday. And, we definitely got that push back up towards the close. Let's take a look here and how things broke down. Honestly, not much has really changed. Looks like here the SPY is down 18.4% on the year. Tech leading the downside at down 25% from where we started on January 1st. Financials, healthcare, all in the negative. Utilities just kind of hanging out here along the zero line, technically in the positive. And of course, energy, the absolute juggernaut this year with gas prices going through the roof. And oil continues to grind towards the upside. Now, it is a bit of a slow grind. I will give it that. But we had this huge move here when, the conflict started in, early March, late February, early March. And we haven't quite gotten back to these 130 levels, but definitely looking bullish here on oil, making a nice slow increase here. I know that not really nice for everybody at the pump. I know that for certain in my area. I'm seeing about, I think it was about 460 per gallon. I know there are other places that are considerably worse. Why don't you go ahead, for those of you watching this on YouTube, comment in the down below. Leave a comment. Let us know what gas prices you're seeing in your area if you feel so comfortable to share it. But I know gas price is a big issue here, and oil looks like it wants to go up more and more. Though we have seen a bit of slowing, but moving into the summer months, I think we will see a continued move. I don't know if we'll make it to 130, but I think 120 is pretty reasonable here within the next couple weeks. Gold, not really doing all that much. Flirting with the 200 simple moving average, but not really paying too much heed to it, to be honest with you. It's really, gold is uninspiring, honestly. It's not doing anything. I feel like a broken record talking about gold, and I'm not quite sure why we keep it on here, but just to keep an eye on things in case things get kind of crazy. We come out of the channel every once in a while, and then we just get right back in. So gold just kind of hanging tough, and not really doing all that much. Bitcoin also has kind of decided to chill out for a little bit. Really just kind of consolidating around this 30,000 per coin area. Right now, currently a bit below it. We seem to kind of come up, come back down. It looks a little quiet today. Obviously, it's the weekend, less crypto being traded today. Really, I can't add much to, what Riz said last week. And if you missed last week's webinar, make sure you go back and watch that. But, Bitcoin and cryptocurrency in general really not acting as a hedge against inflation at this point, and really, kind of just more mirroring the market as far as what's going on with that. And really just not doing so well. You would think with inflation getting higher, the price of crypto would be going up, but not happening at this point, which kind of shows you it's not necessarily directly linked to inflation or things along those lines. We did take one trade this week, and this was obviously a big one. Walmart got absolutely freaking wrecked on earnings, and I mean, what a drop. Let's take a look here from earnings day to where we are now. 20% down on Walmart, which is absolutely ridiculous, but looks like we did have a bit of a miss here. Yeah, we missed there. Revenue was on the positive, a mere $2.7 billion in revenue. Surprise, gosh, must suck. They did miss on EPS, and I think a lot of that can kind of be, tied to the supply chain. Obviously, supply chain is a big issue right now. A lot of people are concerned about it. There's a lot going on, of course, with the Shanghai lockdowns and things like that. If those continue, I think that we will see, some continued downside to stocks related to that. And things that are going on as far as that's concerned. But looking like we've kind of held on here right around this 119 area. Of course, 136 is kind of my area for Walmart. Just kind of earnings kind of threw that support level out the window, and down she went. It was very surprising after this huge dump on earnings, going into Wednesday. But of course, the market was in pretty much a tailspin on Wednesday as it was. So really Walmart kind of going with the market here. The sell-off continuing obviously higher than normal volume, as you can see, post earnings, but we do seem to be cooling off a little bit on Walmart. Let me look at our entry price in there. It's not going to be too spectacular since we got in after the earnings dump. We're in at 131.55. So obviously we're pretty well below our entry at this point. But here's the thing with companies like this. Walmart is the number one brick and mortar retailer in the United States at this point. Look at how oversold this thing is right now. I mean, that is crazy how oversold that is. What's the RSI? 16.19. That's ridiculous, for lack of a better term. And definitely a great opportunity. Now, of course, we're not giving financial advice here. We're just telling you what our entries are and, what our thoughts are on a particular, ticker or something like that. But we are by no means suggesting that you need to get in here. Of course, you need to do your own due diligence and make your own choices on your entries and exits as far as securities are concerned. But that being said, Walmart seems to be kind of holding tough here right around this 120 area. And if we do see continued consolidation on this one, I think we'll probably see some more upside if the market decides to behave. Now, of course, if we see more downside in the market and we get more of a dump, and of course, I always forget to put my pointer back on. If we do break 39 here and we make this push towards 38, and actually hold below 3,900 this time, then I think Walmart may just follow the market at that point. There may be a bit more selling, but I don't think that we're going to see crazy moves like this. Again, like even just from here on earnings day, where are we at now? Still down 15% since, the high on earnings day. So that was pretty crazy dump on Walmart, to say the least. But again, we're really holding tough here right around 120. We'll have to see if it can hold there. But you'll notice that we haven't been placing a whole lot of trades lately. And for all of our people in Elite, of course, we've given you the tiered buy list and what levels you should be looking at as far as where to get in and what companies we're watching as far as that's concerned. Now that, of course, is for Elite only. Yeah, some of you should know that you should have been deploying some capital in some of those dip buy lists. So I hope you were able to get in, had a great entry. I think you still have opportunities if you want to. But one thing I'd also like to advise in this environment is to make sure you're taking profits a bit faster, especially if we're having like these big sell-offs and then a relief rally and then another big sell-off. If you get a position in the green, don't be scared to go ahead and close it early because right now is not the time for bag holding. We are in a downturn, or a downtrend rather, on the market. We're nowhere near all-time highs at this point. Let's see, I know at one point we're over 1,000 points away from where we were before here at the beginning of January, when we hit a new all-time high. Looks here on the 4th of January. But after that, it's been nothing but down for the most part. But there have been ups and downs the whole time, and this is kind of what you have to look for as a swing trader, is being able to, incrementally get yourself into great positions and with great companies, solid blue chip companies like we recommend, not penny stock bullshit as I like to refer to it, but really getting in those solid companies that you don't mind holding, like Walmart. Listen, Walmart's not going anywhere. Supply chain or not, Walmart is still the biggest brick and mortar retailer in the United States. And even if some things from China are delayed, so be it. They're looking, yes, they got pushed down here, but this is what we call a buying opportunity. It's a great buying opportunity on Walmart, on an amazing company. I mean, if I had free capital, I would totally be jumping in on Walmart at this price, but that's just me. Larry would like to know about Amazon. Let's take a look. Okay. Thoughts on Amazon with it being near the 52-week low and a 20-to-1 split coming next month. Okay, so obviously that'll be some dilution. If they're going to cut their stock price down, then obviously we've been beat down here, but the market's in a pretty bad spot as well. Let's see. So we're kind of far back here, about there and about there. And let's see if we go further down. Yeah, maybe right around that area. Okay, let's zoom in here. Now, obviously, when the split happens, these prices will be different. But, Amazon getting smashed down here post-earnings looks like they missed pretty bad, honestly. Really bad. Revenue wasn't terrible, but, EPS was in the toilet, for lack of a better term, and they paid for it in their stock price, that's for sure. If there's going to be a split coming up, I mean, myself personally, I would kind of wait until the split happens. If you haven't gotten in yet, now, of course, Amazon, a rather expensive stock, sitting right now at, $2,000 a share. For most people, that's it's kind of difficult to get into a position of any size with $2,000 per share, but maybe you have a larger account and you can afford that sort of thing. Again, Amazon going to be one of the biggest retailers, online retailers, and great company. Again, not going anywhere. No matter what you think about Bezos and his plans and his phallic-shaped spaceships, Amazon is going to continue to be the #1 online retailer in the United States for quite some time. And me personally, I would definitely like to get in after the split. When the split happens, I think that could be a great entry point and much more affordable for most people. That being said, again, you're able to get one share at 21.01. Okay, fair enough. Well, then you're looking pretty good at that point. You're up, $50. Can't beat that. I would continue to hold then. If you have a share already and you're in the green, I wouldn't worry about it too much. If you want to take profits, you can. And then, look to get in post-split when it's a little bit more affordable. You can get a more sizable position as far as share size is concerned, while keeping, a similar, capital commitment. That's the word I'm looking for. But, I mean, I like it. I mean, of course, market's going down, Amazon's going to kind of go with it. There's some things that just you can't beat the market in some ways. And if the market is going down, you typically don't necessarily want to trade against the market if you can be avoided. Now, that being said, again, we're having, a share dilution here by, increasing basically 20-fold the amount of stocks or the amount of shares on the market for Amazon, which will drop the price considerably to the point where, the average human being, such as myself, might actually be able to afford some shares. So if you're concerned that it will continue to sink and you're green on this already, might be worth taking some money on that and then just holding off and waiting. And then when the split comes, you can jump back in. Especially if it looks like it's going to, start making its move back up, or you can just scale in. Now, of course, if you do hold the stock when the split happens, they will give you 20 shares at the new price. So it's not like you're going to lose your investment. Now, I know, Larry, you know that already, but for anyone watching the webinar, I wanted to make sure that they understood that, if you hold when that split happens, your shares will be updated appropriately based on your position. So if you have a share and you have a 20-to-1 split, you'll have 20 shares at the new price once the split is complete. So just for posterity, for those watching on YouTube who maybe don't understand what a split is, it's basically they're adding more shares to the market to drop the price down. Now, this works, a couple ways. It allows people to get in. And Larry wants to know if holding through the split will be good if it runs up once more people are getting in to the new lower price. Yeah, that definitely can work. And I would be looking to get in on this when they get in next month when they do this split. That could definitely be a really good place to jump in at. And continue to hold where you are now. So, if you have no problem holding, I personally wouldn't, and you don't mind, letting the capital ride a little bit, you can hang on to it. And then, if more people jump in on this, it could definitely push the price towards the upside, for sure. Great questions, by the way. Does anybody else have any other questions? Want to go ahead and open it up? Anybody wants to throw their questions in on the chat? I'm here for you guys. Riz is having a little bit of vacation this week. He had to go to New York for some business. I hope he's having a great time, and I hope that he can spend some time just relaxing. The guy works crazy amounts of hours, and he deserves a little time off. So I'm hoping that he's enjoying that. Of course, I think he's going to do his best to be here next week. And actually, I can tell you for certain he will be, because I'll be on vacation next week. So Riz will be running the show next week completely on his own. So that should be good. Make sure you got your questions ready for him. Netflix, all right. Let me just take a quick drink there. All right. So Netflix got smashed. If I'm not mistaken, their subscriber numbers were not too hot. And honestly, from what I've seen with Netflix, the subscriber numbers matter more than what the actual EPS is, or even the revenue or the forward-looking guidance. Now, Netflix getting absolutely wrecked here over the last couple of months. Let's take a look. Right about there. Here's where we are now. Only negative 73%. That's not a big deal, right? So Netflix getting absolutely smashed, here on earnings, 2 earnings seasons in a row. And of course, the market is going down as well, dragging it lower. I think there's obviously a lot more competition for Netflix at this point. There's obviously been some controversies over the last, year or so with different shows, things like that. And then they're talking about, cracking down on people's password sharing. And, I get that. They want people to actually buy their product. Who would have thought? That they would want people to actually pay for their service and not get it for free. And from what I understand, they're cracking down on that a bit and, trying to get people actually involved in the platform. But, subscriber numbers, I think, took a hit, if I'm not mistaken, and that is what is cause for the downturn. Again, I think it's a pretty solid entry point here on Netflix. Still making plenty of money. EPS was solid, 21% beat. But revenue taking a bit of a hit there. And of course, the subscriber numbers. It all seems to be with Netflix what the subscriber numbers are. And that's the real question. So we'll have to see if maybe they drop the price a little bit to try and entice new subscribers or old subscribers to come back. Or if things continue to be more and more expensive and, the price continues to drop. But, me personally, again, I think it's a pretty decent entry, for Netflix, especially if the market can turn around. You could definitely see a lot more upside on Netflix than where we are now, quite a bit, actually. It's got a lot of space here up to the 200 simple moving average. Now, I'm not saying we're going to get there in a week. It will definitely take quite some time, especially if the market does turn around. But if we see continued selling in the market, Netflix may have a harder time. But volume has kind of come back down towards the earth here, even though we are still a bit higher than we were here in the beginning part of March. Yeah, we're looking at about 6 million, and right now we've been trading about 1710-ish. But yeah, I mean, this is a tricky one. Obviously, if the market continues to sell, then I think Netflix will take more of a hit. But it does seem to be somewhat insulated. I mean, it's not as volatile as it used to be. Even if we zoom in here, these candles are not exactly huge. Nothing like we saw back here in January. These seem to be a little bit more subdued, and I think it's because it's been sold off so hard. It's one of those things when you lose 70% of your value, on your stock price, even if earnings are not so great, it's one of those things where that even doesn't affect the price too much because it has been sold so hard. I mean, look how oversold we are on Netflix back here between, middle of April to, just about a couple days ago. Beat down pretty darn hard, to say the least. And so I like it. I mean, obviously we've taken a beating, but I think we should hopefully see some consolidation here. Could be a good place for an entry if that's your cup of tea. But yeah, I think it looks pretty solid. Looks like it could be a good place to get in, especially if you have no problem holding for longer. I think it could be a great longer term investment. Swing trade for a couple months, things along those lines. Of course, things that we're watching this week are, keeping an eye on, any announcements coming out of the Fed, inflation prints, things like that. That will be incredibly, impactful on the market coming up here in the next couple months. It's definitely something we're going to be watching, and you should be keeping an eye on as well. And of course, being part of here on the channel, if you've, made it this far in the video, make sure you click that like and subscribe button. For all of my elite members here live, really appreciate you guys being here tonight, being on the call. It was great questions. Really appreciate it. And yeah, if you have anything else, please don't hesitate to PM me or Riz in Discord, but do me first. I'll probably be able to answer your question a bit faster because, like I said, Riz is doing his thing, and let's give him a little break. Send me your questions if you need to, and we will catch you on the next one.